a great day at Equity. We're going to talk about the construction loan program here at Equity Resources. We currently offer construction loans for conventional, VA, and FHA loans, including some manufactured and modular homes. The following program information is specific to our construction loans here at Equity Resources. All builders must be approved by Equity prior to the loan file being submitted. We want to be sure that you are starting the project with a licensed and reputable builder. Clients are not allowed to build the home themselves or have a relative be their contractor. Don't own any land to build your dream home? No problem. With our construction loan, it can be part of the package from the builder, or we can help you buy it as a separate lot. A construction loan is a one-time closed loan to build a home, not a line of credit. When a file is started, we need the contractor bid and purchase contract prior to ordering the appraisal. Let's look at some basic requirements for program eligibility on owner-occupied homes. To start, eligible properties are single-family detached homes. These can be manufactured homes in certain loan scenarios. The maximum debt-to-income ratio for all programs is 43%. For conventional files, you need to have a minimum credit score of 680, 6 months of reserves, and the loan-to-value ratio can be up to 97%. If you have an FHA loan, you need a minimum 660 credit score, a loan-to-value up to 96%, 2 months of reserves, and a contingency reserve of 5%. This contingency reserve is to cover unplanned expenses or changes that come up during the building process, and the builder will need to include this as a line item in the contract. If you're a veteran using a VA loan to build a home, the following requirements apply. A minimum credit score of 660, loan-to-value of up to 100%, up to 2 months of reserves, and you must have a contingency reserve of 10% to cover unplanned expenses. Also, your builder must be registered with the VA and still approved by us. While your home is being built, you only make payments on interest. No money is applied to the principal unless you make a payment specifically for this purpose. VA borrowers don't make payments during construction. Instead, a special reserve account is set up at closing to handle the interest-only payments during construction. Your home will need to go through an appraisal to verify the work has been completed before you can close and move in. During this appraisal process, it's important to remember that items written into your contract will delay the closing date if they aren't finished. For example, if your contract says the lawn will need seeded or have sod laid, it must be done for the home to be considered complete for the final inspection. The appraiser can't sign off that your home is 100% done if items legally included in the contract haven't been finished by your builder. For more information on construction loans, please reach out to a trusted mortgage specialist. They'll be happy to talk with you about your construction options and get you started on the path to building your own home. Thank you for joining us. Don't forget to like this video, subscribe to our channel, and turn on our post notifications to never miss a new video. Please leave a comment below if this video was helpful and if you'd like to see more videos on similar program topics.